Get ready because the market is absolutely electric right now, and we've got the inside scoop on the moves that are shaking things up. The pace of change is relentless, and if you're not plugged in, you're missing out. We're diving deep into the data, tracking the big players, and uncovering the trends that could define the next wave of opportunity. This is your essential briefing on what's happening, packed with insights you won't find anywhere else. Let's go. First up, the digital asset space is buzzing as major players are making strategic shifts that could signal a significant market reset. We're talking about massive capital movements and key players repositioning themselves in ways that have everyone watching closely. Is this the calm before a storm, or the foundation for an explosive resurgence? We've got the details on who's moving what and why it matters for the entire market. Then, prepare for a surprising comparison that pits a titan of traditional industry against the king of crypto. You might not expect it, but one of these assets has been absolutely crushing it, outperforming even the most dominant digital currency. We'll break down the performance figures, explore the factors driving this unexpected lead, and help you understand what it means for your investment radar. Next, we're looking at the future of digital asset innovation, and it's all about scaling new heights. We'll explore how cutting-edge advancements are not just improving existing systems, but are poised to unlock unprecedented growth and potentially send a major digital currency soaring to stratospheric new price levels. Get ready for a deep dive into the tech that's building the future. And finally, one company's bold treasury strategy is making waves, doubling down on a digital asset that's captured the world's attention. But with this aggressive approach comes a critical question. Is the potential for long-term value worth the risk of dilution? We're analyzing the strategy, the implications, and whether this bold move will pay off. Stick around, you won't want to miss this. Make sure you smash that like button, subscribe if you haven't already, and hit that notification bell so you never miss an update. Whales shift stakes as Bitcoin braces for crucial consolidation test. Bitcoin faces market reset amidst major long liquidations. The cryptocurrency market has recently experienced a significant reset, with Bitcoin dipping below $112,000 and triggering massive liquidations of long positions. This event, the largest since December 2024, is being analyzed as a potential turning point, possibly establishing a new base for a bullish resurgence. On-chain data suggests that the recent price correction has disproportionately affected newer investors, while those holding Bitcoin for 1 to 6 months have largely remained profitable. Analysts interpret this shift in ownership from short-term traders to more resilient, longer-term holders as a positive sign, indicating a reduction in readily available supply and a strengthening of support levels, which could pave the way for a rebound. Technical indicators and support levels. Currently, Bitcoin is being closely watched as it attempts to stabilize around the $108,000 mark. This level is significant as it aligns with the average cost basis for holders who have maintained their positions for a medium term. Sustaining this price point is considered crucial for stabilizing market sentiment and preventing further downward pressure. Should Bitcoin fail to hold this support, analysts warn of potential declines, with critical levels identified at $103,000 and a more significant psychological barrier at $95,000. The spent output profit ratio, SOPR, for short-term holders remains in negative territory, confirming that capitulation is still occurring within this segment of the market. However, the proximity of Bitcoin to these potential bottoming out levels suggests that a significant price bounce could originate around the $103,000 mark. Whale activity and strategic capital rotation. Whale movements have been a significant factor in the recent market narrative. In a notable transaction, a major Bitcoin whale divested 22,769 BTC, valued at approximately $2.59 billion. This substantial amount was strategically reallocated into Ethereum. The transaction included the purchase of 472,920 ETH in spot markets and the establishment of a $577 million long position on the Hyperliquid platform. This move is widely interpreted as a strategic rotation of capital, reflecting increasing institutional confidence and interest in Ethereum's ecosystem, particularly during Bitcoin's current consolidation phase. Following this, the whale also closed a $450 million Ethereum long position, securing a profit of $33 million, further highlighting sophisticated trading strategies. Ethereum's growing dominance and institutional inflows. Ethereum has seen a considerable boost from such capital flows. In a separate development, another significant whale staked $2.5 billion worth of ETH through a single transaction, underscoring a strong long-term conviction in Ethereum's network. This substantial accumulation aligns with Ethereum's expanding role in decentralized finance, DeFi, and its increasing adoption by institutional investors. Analysts are closely monitoring the ETH-BTC ratio, which currently suggests a rotation of capital from Bitcoin towards altcoins, potentially anticipating a broader altcoin rally. Ethereum's ability to maintain key support levels above $4,400 also highlights its relative resilience compared to Bitcoin's recent price volatility. Market outlook and critical consolidation. The market is now entering a critical period of consolidation. Bitcoin bulls are focused on defending the $110,530 support level. A successful defense of this level could allow Bitcoin to re-enter a trading range between $110,530 and $124,474. Conversely, a breach of this support could trigger a correction towards the $100,000 mark. Ethereum, meanwhile, appears to be in a stronger technical position, with the potential to challenge the $5,000 resistance level if buyers continue to defend its key support zones. The ongoing whale rotations into Ethereum, coupled with shifts in institutional preferences indicated by ETF inflows, suggest that the market is poised for a period of heightened volatility and strategic repositioning. But what does this mean for the average investor navigating these choppy waters? Now, let's pivot to a surprising contender that's been outperforming the crypto giants. Rolls-Royce share price is beating Bitcoin, which is a better buy. Unexpected outperformance in traditional markets. In a surprising turn of events for the investment world, the share price of Rolls-Royce, the renowned aerospace and industrial giant, has demonstrated remarkable performance over the past 5 years, significantly outperforming major cryptocurrencies like Bitcoin and Ethereum. This trend extends to traditional market benchmarks, as Rolls-Royce has also surpassed the performance of the FTSE 100 and S&P 500 indices during the same period. The data reveals that Rolls-Royce shares have surged by an astonishing 1,200% over the last 5 years. In contrast, Bitcoin, while experiencing significant growth, has seen an 840% increase in pound sterling terms within the same timeframe. To illustrate, a hypothetical £1,000 investment in Rolls-Royce shares at the beginning of 2021 would be worth approximately £10,227 today. The same £1,000 invested in Bitcoin during that period would only be worth around £4,222. Year-to-date performance analysis. This outperformance is not confined to the longer term. It's also evident in the current year's performance. Rolls-Royce stock has jumped by 82% year-to-date. This figure starkly contrasts with Bitcoin's performance, which has risen by 9.7% in sterling terms and 20% in US dollar terms over the same period. This comparison challenges conventional wisdom, which often favors digital assets for high growth potential. Rolls-Royce, a deep dive into business drivers. Rolls-Royce Holdings plc is a diversified industrial powerhouse primarily known for its high-performance aircraft engines. Its business model also encompasses power systems for sectors like defense, including engines for submarines and crucial components for civil aviation. A significant portion of its revenue, and more importantly, its profits are derived from long-term service and maintenance contracts with airlines, which provide a stable and recurring income stream. The company's recent surge in share price can be attributed to several key factors. The recovery of the civil aviation industry post-pandemic has been a major tailwind, increasing demand for its aircraft engines. Furthermore, the heightened geopolitical tensions and increased defense spending in Europe and the United States, partly due to the ongoing conflict in Ukraine, have boosted its defense sector. Rolls-Royce's involvement in strategic defense initiatives, like the AUKUS submarine program, further solidifies its position. Growth in power systems and financial health. Beyond aerospace and defense, Rolls-Royce's power systems division is also experiencing robust growth. This expansion is fueled by the global resurgence of nuclear power and the rapid advancement of artificial intelligence, which drives demand for reliable power solutions, including those used in data centers. These positive developments have transformed Rolls-Royce into a fast-growing and highly profitable company. Recent financial reports highlight this success, with revenues climbing to £9 billion in the first half of the year, an increase from £8.1 billion in the same period last year. Its free cash flow also saw a substantial jump, rising to £1.58 billion from £1.15 billion year-on-year. This strong financial performance has enabled the company to reinstate its dividend payments and initiate a significant share repurchase program, valued at approximately £1 billion. Bitcoin versus Rolls-Royce, a comparative outlook. While directly comparing Rolls-Royce shares to Bitcoin is often considered an apples-to-oranges scenario due to their fundamentally different natures, one being a product-based industrial company and the other a digital currency without dividends, the performance metrics are compelling. However, in the long term, many analysts still anticipate Bitcoin's price appreciation to outpace that of Rolls-Royce. This expectation is based on Bitcoin's unique supply dynamics, with a hard cap of 21 million tokens and a decreasing supply available on exchanges. Projections from industry figures like Sergey Nazarov suggest Bitcoin could reach $1 million, while BlackRock estimates a future value of $700,000. Despite Rolls-Royce's exceptional recent performance, Bitcoin's potential for future growth, given its scarcity and increasing adoption, remains a key factor for long-term investors. So, while a traditional industrial stock is currently winning the performance race, what's next for the digital asset world? Get ready, because we're diving into innovations that could send Bitcoin to astronomical new heights. Bitcoin's path to $200K. How Layer-2 innovations and Bitcoin Hyper's $12M ICO are fueling the next bull cycle. Layer-2 scaling solutions drive Bitcoin's potential. The cryptocurrency landscape is abuzz with discussions surrounding Bitcoin's potential to reach unprecedented price levels, with targets like $200,000 being frequently mentioned. A significant catalyst for this optimistic outlook is the ongoing development and adoption of Layer-2 scaling solutions. These innovations are designed to enhance Bitcoin's transaction speed and capacity, addressing some of the network's inherent limitations and making it more viable for everyday use and broader institutional adoption. Solutions like the Lightning Network are crucial in facilitating faster and cheaper transactions, thereby increasing Bitcoin's utility and demand. Bitcoin Hyper's ICO and ecosystem growth. Adding another layer of excitement to Bitcoin's upward trajectory is the successful initial coin offering ICO of Bitcoin Hyper, which reportedly raised $12 million. While specific details about Bitcoin Hyper's project are not provided, ICOs of this nature typically aim to fund projects that build upon or integrate with the Bitcoin ecosystem, often leveraging Layer-2 technologies or introducing new functionalities. Such initiatives can attract new capital, developers, and users to the Bitcoin network, fostering innovation and potentially driving demand for the underlying asset. The success of these funding rounds often signals strong market confidence in the underlying technology and its future potential. Fueling the next bull cycle. The combination of technological advancements in scaling solutions and the influx of capital through new projects like Bitcoin Hyper's ICO are seen as key drivers for the next potential bull cycle. As Bitcoin becomes more efficient and accessible, its appeal to a wider range of investors and users increases. The narrative around Bitcoin as a store of value, similar to digital gold, is further strengthened by its increasing utility and the robust development within its ecosystem. These factors collectively contribute to a positive sentiment and create an environment conducive to significant price appreciation. Market sentiment and future projections. Analysts are closely watching these developments, with many believing that the current phase of innovation and investment is laying the groundwork for a substantial rally. The enhanced scalability and utility provided by Layer-2 solutions, coupled with the capital and innovation injected by new projects, are expected to create a powerful demand surge. This demand, against Bitcoin's inherently limited supply, is a classic recipe for significant price increases. The market is anticipating that these combined forces will propel Bitcoin towards new all-time highs, with $200,000 emerging as a frequently cited target. This innovative push is clearly creating momentum, but what about the companies actively shaping Bitcoin's future on a corporate level? We're now turning our attention to a company making bold strategic moves with its digital asset treasury. MicroStrategy's Bitcoin treasury strategy. Is dilution a price worth paying for long-term value? MicroStrategy's aggressive Bitcoin accumulation strategy. MicroStrategy has continued its aggressive strategy of accumulating Bitcoin as a primary treasury reserve asset. The company has consistently purchased large quantities of Bitcoin, integrating it into its corporate balance sheet as its main treasury holding. This approach, pioneered by CEO Michael Saylor, positions MicroStrategy as a significant institutional holder of Bitcoin and a vocal advocate for its adoption as a digital asset. The company's ongoing commitment to Bitcoin acquisition reflects a deep conviction in its long-term value appreciation potential. Funding Bitcoin purchases through debt and equity. To finance these substantial Bitcoin acquisitions, MicroStrategy has employed a multifaceted approach, including issuing convertible notes and raising debt. More recently, the company has also explored equity financing options. This includes filing to sell up to $1 billion worth of its Class A common stock. The proceeds from these stock sales are explicitly earmarked for the purchase of additional Bitcoin. This strategy, while enabling significant Bitcoin accumulation, also raises questions about the potential impact on existing shareholders. The dilution concern. The primary concern arising from MicroStrategy's strategy of funding Bitcoin purchases through equity sales is the potential for shareholder dilution. When a company issues new shares, the ownership percentage of existing shareholders decreases, potentially affecting earnings per share and the overall value of their holdings if the market does not fully price in the value of the newly acquired assets. Investors are closely evaluating whether the long-term appreciation of Bitcoin held by MicroStrategy will outweigh the dilutive effects of repeated stock offerings. The market reaction to these announcements often reflects this tension between the perceived value of Bitcoin holdings and the cost of dilution. Long-term value proposition versus short-term costs. MicroStrategy's management argues that its strategy is focused on maximizing long-term shareholder value by leveraging Bitcoin as a superior treasury reserve asset compared to traditional cash. They believe that Bitcoin's potential for significant price appreciation, coupled with its limited supply, makes it an attractive asset for a corporate treasury. The company's continued purchases, even during market downturns, underscore this long-term conviction. However, the market's perception can be mixed, with some investors appreciating the bold Bitcoin bet and others expressing concern over the financial engineering and potential dilution. Market reaction and analyst perspectives. The market's reaction to MicroStrategy's announcements regarding Bitcoin purchases and stock sales has been varied. While the company's stock price often sees short-term fluctuations based on these announcements, the long-term performance is heavily tied to the price movement of Bitcoin itself and the market's overall sentiment towards the company's strategy. Analysts remain divided, with some supporting MicroStrategy's thesis on Bitcoin as a growth asset, while others caution about the risks associated with leverage and equity dilution. The ongoing success of this strategy hinges on Bitcoin continuing its upward trajectory and MicroStrategy effectively managing the financial implications of its aggressive acquisition plan. This company's bold strategy highlights the evolving landscape of corporate finance in the digital asset era. Now, let's wrap up with a quick recap of all the major stories we've covered today. And that's a wrap on today's Market Movers. We saw whales strategically repositioning Bitcoin for a potential resurgence, a traditional industrial giant surprisingly outperforming crypto, and innovative Layer-2 solutions paving the way for Bitcoin's next bull run, all while MicroStrategy doubles down on its Bitcoin treasury strategy. Don't miss out on any of these critical updates. Make sure to hit that like button, subscribe to Bitcoin Bulletin for more, ring that notification bell, drop a comment with your thoughts, and follow us on all our social channels.